Okay, guys and girls, I appreciate you all tuning on a Sunday evening. As we've said on previous weeks, we are going to be hosting a call every single Sunday, giving you guys a little bit of a market overview, recap of the week, and also just training you guys on how to maximize your potential within inside the community. We've had an insane win rate over the last week or so. For those of you who saw the stats, the results that we've had, last week for me was the start of an amazing comeback. Obviously, we had a few weeks where the market was giving the trials and tribulations. For those of you who haven't seen, we sent 35 trades. We had 30 wins. We had 5 losses with a win rate of 86%. Obviously, past profits do not guarantee future results. But the big thing I want to share here is 8 of them trades hit TP1, 8 trades hit TP2, TP3, there was 12 trades that hit that, and we had 2 trades out at break even. And the reason that we're going to start doing these calls a little bit more on a consistent basis is so that you guys who are new, who are trading, and also the seasoned vets as well that have been with us a good while now, so that you can get to a very good understanding of how to trade and how to pull money out of the market day in, day out, regardless of the win rate. So, obviously myself, Matthew, James, we're going to be hosting a lot of calls, a lot of trainings. Obviously, I do mine every single week around mindset, psychology on the market, and ultimately getting to that. Someone's just asking questions about how come more TP1s and TP3s and TP1s. Like, add it together. Come on, like we're not in baby school now when it comes to maths. I'm saying if it's been 8 to TP1, it means they didn't go to TP2, they didn't go to TP3. Um, Come on, like let's just use as noggins a little bit. Obviously, if it goes to TP3, it hits all of them, right? Come on, like stick with me on this one. Like I know it requires a little bit of brain use on a Sunday evening, but we're here for that. So I know Matthew's with me now. I listened to what I said. I listened to what I said. You asked the same questions on each one, but Matthew is here, good to go with his glasses on, the shiny head. And I'll allow you to unmute yourself, my friend, just so that we can see this there, and then we'll be cooking on gas. Can you hear us, bro? 1 second. Ask to unmute. Ask to unmute.
There you go. We should be able to hear me now,
Yeah, yeah, yeah.
unfortunately for everyone.
Yeah.
How are we doing?
Good man, yourself.
Yeah, all good, all good. So let me share my screen first because we got into send a request to you to do that.
Oh shit! Press that button again, mate. There we go.
Yeah.
Allow. There you go, mate.
Right, can you see the screen?
I'll tell you in a second when I can. Try again.
Here we go.
There we
There you
go.
go. Is that visible? Yeah.
Yep, good to go, bro.
Cool. Well, welcome everyone. Good evening. Welcome back to another training session that is going to be from now on. This is going to be the fixed strategy, the mechanical entry model that we're going to be using moving forward. Obviously, I've already put what I would like to call a written apology in the group, so I'm not going to spend any time on that. Really, I want to just glaze over that, get that. That's in the past. Obviously, we could never envisioned the market acting and behaving the way it did last week after telling you to set your stop losses at break even, and everyone took it literally, which is really good to know that people are listening to what I say. That has given us a really good platform that we're going to now use as a springboard to move forward with a slightly adapted entry model that I think, with the current market conditions, is going to help everyone become a lot more profitable. So, with that out of the way, we're going to jump straight into it. And we'll talk very briefly about the approach that we're going to take. The approach itself hasn't changed. We are going to be entering the market, and if you've got pens and papers, get about. And if you wouldn't mind just maybe screenshotting, I know it's going to be recorded, but if you screenshot the notes that I put on the screen there, it's going to be helpful for any of you that want to look back at it and just revert to what we're talking about. Now, we're going to be entering the market at 2 prices only. And all markets from that point, sorry, all market updates from that point are going to be strictly with a beginner profile in mind. So we know there are people in the group that are taking 4 to 5 layers on every trade. We know there are people in the group that are using big lot sizes. We know there are people in the group that are more advanced than others. They are not the ones that need our support. They're not the ones that necessarily need their hands held in per se. And there's a lot of you that do, and that is great. And that's why I'm so happy to see so many of you on this call to get that help. So we are going to be entering the market twice and twice only in all instances. Okay, that is our attempt anyway. If the market presents us the opportunity to enter twice, we're going to be entering twice. The first entry is what I call worst entry, but actually it's just your market execution price. And the market execution price is the price that your gold is at when I send the signal. This is the price that I send the signal at, the first four digits. Let's use this one on the screen here, 3331. So at this time, and we will go over these trades in a bit more detail, but I just want to get the foundation of it before we deep dive into what the layering looks like. So when I send a signal, let's say, for example, a buy at 3331, you open up your MT4 or your MT5. You check to see that the first four digits match 3331 or within a 10 pip range of 3331. Now, one thing I just want to address very quickly is that some of you will be like, well, it's 332 by the time I get to it, or it never went to 3331, it went to 3331.6. I don't work with gold based on the decimal places. The reason for that is because one, it moves too quickly, and two, it's unreasonable for us to count the twos and threes and fours pips. Now, when you were looking for take profit ones and you were targeting 30 pips, 6 pips makes a massive difference. That's not our approach. We are not looking for our trades just to go to TP1. That is not to say that you shouldn't take TP1. That's your decision. If you feel comfortable there, take TP1. The point I'm trying to make is the 2, 3, 4 pips that you've been complaining about, and rightly so, is not going to matter anymore because we're looking for the 100 to 150 pip moves so long as you're managing your trade correctly. Now, if a position layers fully into the deepest part of the zone, so you're using the first price, so in this example, it'd be 3331, and if it layered to 3328, as soon as your first entry at 3331 comes back into profit or at break even, you are to close that position with no exception. You're not going to start thinking, no, but it's really bullish. Well, I'm going to leave this one this time. You're not going to question it. You're going to approach it with zero emotion. I want you to try and become as robotic with these entries as possible. As soon as that first entry comes into profit or break even with the best layer up running profit, we close the first entry. The reason that we use that first entry is so that we don't miss the move. That is it. If we get in at a better price, that position is actually no longer serving us. It's actually just increasing our risk. And I'll talk a bit about more on that in a minute. Once we've taken our market execution position out of the market, then you are to let your best entry ride to a take profit level that is based on your own personal risk management and style, whether that be TP1, TP2, TP3, or TP open. And I'll talk a little bit about when we get to TP3s in a minute, but that again is your decision. Personally, I'm targeting at least 150 to 300 pips every move. Obviously, that is not to say I get it, but that is what the entry model is targeting when I enter the market. Again, when I say buy or sell now at a price, ensure that you're in a 10 pip range. It's still safe to enter if it is within 10 pips. If it isn't within 10 pips, don't want you jumping on support saying, oh, you entered in, it said this. That's just how the market moves. Everything we do in this group, every single thing is to help you grow, is to support you, is to help you prosper and profit. We're trying to educate you, enhance your ability to take these trades. And there's nothing sinister or another ulterior motive if the price is slightly off when we send a signal. You have to understand how volatile gold is. It's not like no other pair on the planet. We understand that it's frustrating, but in those situations, what I want you to understand is that we are, the Forex market is trading $7 trillion every single day. Missing one signal, 2 signals, 10 signals over a month is not going to make a difference. It's not even going to make a dent. Okay. There are going to be setups that leave without us. It's no big deal. And that's going to take me on to then we're going to talk about the trades in a little bit more detail. I'm just going to minimize this down so I can see the screen better. Right. So let's use the replay function to have a look how these trades would actually play in real time as close to as we can with the replay function on TradingView. So let's go to sort of around here. So as you can see on the screen, I've got, let me move that up to 1. Right, we've got a buy signal. I'm not going to go into why this is a buy zone. This is just one of our buy zones. Price is traded above our buy zone. I am waiting for price to come back down to 3331 to 3328. Let's play it out, and then we can pretend we're entering the market per se. Okay, as you can see, price has gone into our range. So when I send the signal, I want you to check the first 4 digits match. Hopefully they will line up. You're going to put a first entry in at 3331, and see here, this is exactly what I mean. It's 3331.19. Don't worry about the last 2 digits. Over time, over the months, over the weeks, these 4 or 5 pips, whatever it is, they're not going to make any difference. You're going to be making so much profit, you're not going to care. And in this instance, the zone has layered perfectly down to 3328, as you can see. So when we send these signals, you do a market execution. I'm just going to go as close to 3328 as I can, just to make it easy. And then you're going to get out your phone, MT4, MT5. You're going to click buy so long as these first 4 digits match or within 10 pips. Then what you're going to do is you're going to set a buy limit, or you're going to wait until price comes to the 3328 area. Again, it could be 3328.3, 3324. My advice would be to wait to use the buy limit, but if that's too confusing, just do it manually. Once that's happened, you're going to have 2 positions in the market. I've lined them up, and I'm also going to use a nice green arrow to make it clear. As you can see in this instance, we've layered perfectly. And as this first entry, so your best entry is now running, as it comes back to the other one, it's running 35 pips, okay? As your market execution position is coming into break even, and this trade, remember, was only to get us into the market. That is its purpose. It has now served us, and we have a better entry doing a better job. This is now obsolete. We get rid of it. No matter what, no matter how strong you think the move's going to be, no matter how weak you think the move's going to be, it doesn't matter what your emotions tell you. We stick to the system. We move this trade out of the market. Okay, and then we've got our TP levels, 3334 here somewhere. That'll do. We'll play that one out, and you can choose then to do whatever you like to do. Whatever your, let's speed that up a bit, it's going to take forever. Okay, TP1 is now hit. Personally, I would maybe be taking partial profits to secure some profit. Maybe if you're using a 0.2 or a 0.3, you could take a 0.1 out of the market. And then obviously we've got TP2, which is up here somewhere. So 3338. So that was going to be over here area. Again, I'll be securing potentially some partial profits here, and so on and so on. Okay, that's a long position layering technique. Let's look at a short, but nothing is going to change apart from that we're going into a sell rather than a buy. So we've got a zone here. So the replay. So at this point, slow that down a bit. Obviously, this is going to really, really simplify now. We're not doing all the stop loss to break even stuff as well. Because if I'm honest, guys, these zones, 90 to 96% of the time, they're respected. And actually, the reality is the more touches, that the more strong the move going the opposite way becomes, because it means they're tapping out more positions. Anyway, so we've got a sell position, a sell trade. I've sent it 3339 to 3342. You're going to open up your MT4, your MT5. You're going to make sure these first 4 digits match within 10 pips. You're going to execute without hesitation. I don't want you going, oh, I don't know. You know, we have to be on these trades without fear. We have to be taking as many of these trades as possible. Even after a loss, even after a win, everything has to stay consistent. Your entries, your lot sizes, the amount of layers you're using, we don't change it, okay? Because we want to start learning to be mechanical about these entries. It's so important. Then you're going to set up a limit at 3342 on this one, around this area somewhere. Let's use that. We'll play it out. How does this play out? And as you can see, this one It hasn't layered at this stage. So we're going to leave this one in the market. We don't delete this one just yet because price might still come back to respect the 50%. Obviously, we got TP1 down at 3336. Let's go with that. TP1 hit. Now, in this situation, when we have a layer that's not been activated, as soon as we hit TP1, we remove the back end, the better entry. There's now the trade is complete, and therefore we don't want to leave this because we could forget about it. Price could reverse and then continue up. In this instance, we remove the better entry out of the market. That is no longer serving us. And then again, you can make your decision on what you do with TP1, TP2, and TP3. And I can tell you all these trades go on to TP3. Let's do one more entry, and we will talk about if you do want to hold your trades a little bit longer. There's another buy I think I set up somewhere. Here we go. Let's do this buy here. This one didn't there again. So again, we've got, sorry, let's get rid of these first. Again, we've got one of our buy zones. Doesn't matter why it's a buy zone, it's a buy zone. We're waiting for price to trade above and come back. So price is traded above. Hasn't traded above just yet. Okay, so this is where we're going to be entering. We said 3325 to 3321. Again, you're straight away. As soon as I send that signal, no hesitation, open up your phone, MT4, MT5. If the price matches 3325.6, 3325.7, 3325.9, it doesn't matter. Click the button within a 10 pip range. Then we're going to set up our limit as well. Obviously, this is moving a lot quicker. You would have time to do this. 3321 is our limit. Obviously, this one's already hit TP1. I believe, yeah, it's already hit TP1. Again, the trade is now complete. We're then going to go back. We're going to delete the best entry. And let's play this one out, and I will talk a little bit, not a great deal, but just very briefly on how I would structure my TP. So this one is obviously taken off. At this point, this trade is now 150 pips in profit. That's TP3's been hit. Now, personally, once the trade has hit TP3, I am moving my stop loss to break even. You will never hear us talk about that in the group again. You will never hear us talk about that in the group. That is what I personally do. When the trade hits TP3, my stop loss is at break even. And then I'm closing up to 90% of whatever's left. I've taken partials here. I've taken partials here. And at TP3, I'm remaining positions, I'm taking 90% out of the market. At this point, I've only got 10 to 20% running in the market, depending on what my lot size position was. That is what I do.
Interject there real quick because there's a few questions coming through. So, guys, when he's saying he's taking partials off and he's letting them run, what that means is if we use 0.1 as an example, obviously there's 10 0.01s in that. So what you can actually do on MetaTrader, and I've got a video of this on my YouTube, you can actually hold down the trade. So let's say you're £100 in profit. You can hold down the trade. You can click on close. And at the top where your lot size is, you can go into there, cancel off that, and you can take half off. So what will happen is, let's say you're using 0.1. If you close off 0.05, it will take 50 pence worth out of the market. So half of your lots will go out of the market. So you'd be able to cash in 50 quid and the rest of it would run. That's what taking partials means. So you would basically hold it down, click on close, and you take off the lot size and chunk that down as you go, as the trade moves up, just for those asking.
Yeah. We do have a video on that, I think, don't we?
Yeah, we do. Yeah.
Okay, cool. Yeah, again, we won't ever be talking about stop loss to break even again in this group. That is personally what I do. What you choose to do with a trade once it's hit TP1 is completely up to you. Now, when it comes to the take profit levels, I want to give you some clarity around how the trades are set up. Now, we use a standardized, it sounds standardized, and it sort of is standardized, 100 pip stop loss. There will be very rare occasions where we use a smaller stop loss. That is nothing to do with not trusting the setup, the strategy, or us thinking the market might move against us. It depends on the size of our zones. I'm not going to go into too much detail, but we use a 100 pip stop loss because we have a 40 pip range and then a 40 pip buffer, and then it's a little bit below the zone. Now, with a 100 pip stop loss, we need to be, if you're taking just TP1s, which is either going to be 60 or 30 pips, depending on the layers, means you're going to need 4 of those to make profit if you take a stop loss. Now, the numbers don't lie. Yes, we've had a rough couple of weeks. Well, we had a difficult couple of weeks, should I say. Even when we've had difficult weeks, we still are hitting way less stop losses than any other strategy, right? And what that means is even if you do take TP1, you are still going to make money, but you're going to find it harder. You're probably going to feel the emotional roller coaster of hitting a stop loss because you're going to see a lot of red compared to blue. So you need to weigh up your options in terms of what TP level you're going to take. For argument's sake, TP2 might be a really good place to target if you're worried about the risk to reward and all that sort of stuff. Personally, and again, this is just me, this is not advice. I don't suggest you trade this way. I'm targeting up to 300 pips per move. Now, we're not always going to get that, so I don't want to see you start just trading for 300 pips and not taking anything. If you are using a lot size that allows you to, you should at least be taking partial profits at TP2, then TP3, and leaving a runner to do the rest of the work. We won't talk about runners tonight. All I want to nail down at the moment is this entry level stuff. So I'm going to go over one more just to make sure that's solidified, and then we can answer any questions or some of the questions that are there. Just going to talk about it very briefly one more time. Let's use the first example because that was perfect. First example. So I've just sent a signal at 3331. You're all picking up your phone straight away. You're checking to see if these first 4 digits are matching. 331.2, great. Let's get in the market. Matthew sent a signal. Bang. Push that button without hesitating. I don't want to see you checking the chart. Oh, I'm not sure. Or this group's saying that. Matthew's telling you that there's a signal. There's a 96% chance that that trade is going to play out correctly. Then we're going to open our MT4, MT5. We're going to enter a buy limit at the second number, 3328. Don't worry about the rest of the numbers in that range. 3328 is the around area, is the area you need to look for. And that is it. The minute, the absolute second that this entry, your market execution entry, your worst entry, it sounds really negative, but we call it worse because there's a better one in the market, is no longer serving you. I know a lot of you are going to be thinking, yeah, but if we have 2 positions and I take this one to TP1 and this one to TP2, don't do it. Not now. We are training you to become mechanical without hesitation, without question. Get rid of it. Okay? Then if it hits TP1, that trade has delivered value. What you choose to do with it is then up to you. We will then update as the trade moves forward. Obviously, if it goes all the way to TP3, you'd be absolutely bonkers not to be taking the rest of any positions that you've got left in the market and allowing your rest to run with a stop loss at break even, but we won't be talking about it. So that's the entry model I want you to get in. This very, very simple entry model at the minute. It's just 2 entries, but to be honest with you, it's one I use still to this day because the way gold is moving at the minute, I used to be using 4 to 5 positions. I'm now only using 2. Okay, and that's not me just telling you that. It's truth because I can't manage that many trades anymore because I've never seen gold moving as aggressively as it is. As you can see in this example here, it came back to touch this zone 5 times before it moved in our direction. This strengthens our position and actually our move, but I've never seen it do this more than 3 or 4 times. The other day, there was 16 touches of one of our zones. So it's impossible to manage that many trades. So remember, we always need to be closing that predetermined level, that market execution level, and allowing our best entry to use to run and do the work. And that is going to remove a hell of a lot of risk, and it's going to remove a lot of the emotion for most of you as well. I think that's probably all from me, mate, unless there's anything else you want me to cover.
No, not particularly from my side, mate. I think people just, when you get into this, like, don't be afraid of closing the don't be afraid of closing the worst position. That's my That's my kind of thing that I always say to people. Like, it's very, very easy to be like, oh, I could run and it could make me more money and it could do this and it could do
Yeah.
that. But the grand scheme of things is if you start being that person where you go against the strategy and you go against like kind of the system, you're gonna just fuck yourself in the long run. Um, so like that's what I would always say to people there is just let that run, let it do its thing. And be the kind of student that it is. Like if you
Yeah.
it's like in this it's the same as when you're trying to get into shape, it's trying to get into the biggest, whatever you want to do, follow the person who's got the results that you want. So when
Mm.
it comes down to lot sizes, everything like that, again, that comes down to you. We can't be holding your hand on every single thing. But it comes down to a point where you have to start taking a little bit of ownership on you. We did the TP1 training a little bit back. That's because a lot of you weren't taking any profits. The market was running 150, 200, 300 pips, and you weren't banking anything, some of you on here. So again, get yourself consistent with this. We've got the videos step by step in there, sharing with you what to do, how to do it, when to do it. If the market doesn't layer, you just take the first trade, let that run up, and then take partials along the way. And we're going to be doing these calls a hell of a lot more during the week, obviously on Sundays going forward every week. And then we've got the mindset call, which is more based around like the psychology and everything that we use as traders midweek. So again, like if you guys have any questions, don't feel free, don't hesitate to message us. But the key with this is if you don't understand it, asking the same question over and over again isn't going to help. Go back, watch the video. This is going to go straight onto YouTube after this. A lot of you almost want your hand holding too much, right? To a point where you're handicapping yourself to a point where you can't win. Some people are asking the same questions over and over again, even in the private chats on here. Like, when should we close the worst entry? Like, it can't be any clearer when it gets back to your entry. Like, and this is where I fear for a lot of people when they can't. And again, this is me just being real and raw. This is how I know trading isn't for some people. You have to take clear, constructive sessions. So when this bit here, if you enter at, let's say 31 or 39, as you can see in the middle of the screen here, right? If you enter at 39 and it comes back to 39 after going to 42, that's when you get out of the market or break even. Okay. So go back and watch these sessions over and over again, over and over again, over and over again to a point where you feel comfortable with it, because we want you to be killers in the market. We're training you to a point where you remove all emotion out of it. You remove your thoughts, your processes. And that's all Matthew's done for the last however long. That's how he's able to make the amount of money that he is because he's numb to the game. So we're going to post this straight onto YouTube. And again, we'll get you guys rocking and rolling in no time. We're going to do this week in, week out, week in, week out. Anything else you want to add, bro?
Just two things. The first thing, I've just seen a question about trading times, which I'm really happy to see a trading about that. 5 a.m. is when I'm up. I pray and I meditate very quickly, and then I'm on the charts looking for an opportunity. Doesn't mean we're going to get one every day, because I will only trade when the setup meets the entry criteria. But as a safe bet, if you're up by 5:30, and I know that might make some of you feel uncomfortable, guess what? The market doesn't care about your schedule, really doesn't. I know a lot of people on Instagram will jump on and say, oh, you don't need to trade every day. You don't need to trade every hour. And it depends what you want from this, right? It's like anything else in life, you get what you put in.
Right.
Now, if you want to move over to financial freedom and trade in anywhere on the planet like I do, then that is exactly what you need to do. You need to be up. If I'm up, then I'm looking for a position. And I think people need to, I get it. We've all got schedules. I've got three children. One of them who's only 8 months old. I've got a very tight schedule myself, but this is what I do for a living, right? Now, the beauty of this is I do it for my legacy, for my family. And if you want to be in that same position, which you can be, by the way, by taking these signals. And that was what the other thing I just wanted to talk about is, we talked about worrying about that entry not running to profit. I use this system to this day, and I've built a 25K account in 8 weeks by 900% using this exact system. Nothing different. Two entries. As soon as that first, even I'm doing it. right? So if you're holding on to that market execution entry, you're bonkers because it's not serving you. What you've got to remember is that we have that better layer in the market. That's that better entry. We're only 60, 70 pips away from stop loss, not 100 now. So if you then does reverse and hit stop loss, you've hit 100 pips, whereas everyone else is hitting 60 and 70. So get up early, follow the trades without fear, follow as many of them as you possibly humanly can, because that again is going to increase your equity. And just follow the system. Don't try and cheat it. Like I said, I've built an account over the last 8 weeks by 900%. And I don't say that to brag. I say this works. It really does work if you follow the mechanical strategy that we're teaching.
And what I'm going to do is just a few people are asking for the link. I'm going to put the YouTube stuff in there. Step 3 is just being changed on there as well. So I'll put in kind of the step-by-steps on here because I had a few people who were saying, oh, you know, how do I know what to do? How do I know when to do this? So in the chat right now, there is the step 1. Step 1, step 2, step 3, go watch it. And also you've got the playlist on there as well. Again, we don't create these just for the sake of it and you know, having all the stuff there for us. It's a case so that you guys can go through and understand what to do, how to do it, when to do it. So I'll put both of these in here for you guys. And this is something that, you know, we're going to continuously update. And yeah, I'm excited for this week coming up, that's for sure. And yeah, it's going to be a big week. I'm excited.
Yeah, it's going to be a good week. I've done some back testing and looked at the price action over, you know, when I was looking at what the market was doing a couple of weeks ago, I back tested 470 up close and down those candles. So we've nailed it now. It's back to flow, and I figured out what they were doing, so we should be all good. But this week was a really good week, apart from the fact that I told everyone to take stop loss to break even.
But we're good now. So, we're good.
Yeah.
All right, guys. We'll let you guys enjoy the rest of your Sunday evening. Go get ready for the markets. Get up, get to bed early. Get up early. We'll see you guys first thing in the morning. I appreciate every single one of you tuning in as per usual. I'll put the recording to this into the community straight after this, so all of you can go back and watch it if you need to do. Print screen where you need to and understand what it is that we're doing. This isn't something that you're going to maybe get immediately. But again, it comes down to everything, you know, at this moment, we're getting you to get used to putting your socks on. Then eventually we'll get used to putting your shorts on. And eventually you've got your running trainers on. And then hopefully your boxer shorts on with that. So guys and girls, I appreciate you all. Have a blessed evening. Matthew, I appreciate your time as always, my friend. And I'll see you all very, very soon. Good night.
Thanks, guys. Bye-bye.